Okay, 2:30 is when we're going to hear out from the management as well. But Dinesh Shukla from Sharekhan 2 is with us. Dinesh, I'm just going to read out the numbers for you. The NII has beaten street estimates at 7,070 crore rupees. The PAT has shown growth of about 20.25%. The NIMs have come in stable at 4.3% versus a comparable of 4.2 on a sequential basis. The gross NPAs, they have come in at 0.97% versus 0.91. So they've risen sequentially. Net NPAs at 0.29% versus 0.25 sequentially. Provisioning as well sequentially has come in higher, 654 crore rupees versus 681.3 the previous quarter. And advances have shown a growth of about 25.7%. Deposits are higher by 26.5% year on year. Your first take on HDFC Bank.
So overall, the earnings numbers were in line with estimates, though there was a positive surprise on the net interest income. The margins have also improved on a sequential basis, so a strong operating performance.
Mayuresh, I'd like to get in your opinion. What is it that you would be watching out for by way of management commentary? There will be important to monitor the sale of loans to asset reconstruction companies, some of the operating expenses, as well as the focus on the retail portfolio. What is it that you would like to hear?
Afternoon, Navan. Clearly, yes, I think all these aspects would need to be keenly watched out, what the management has to give out. But clearly, I think two important aspects basically stand out. I think the outlook that the management has, both in terms of how the credit demand is looking up over the next few quarters. Secondly, I think in terms of the provisioning that they've probably done, I think one needs to understand how the gross NPAs have probably gone up. I think it is because of excess recognition in the system as per the RBI directive. But overall, I think numbers on the top line, beat our estimates, NIM, bang in line, profitability, bang in line. So clearly, I think no complaints from the number, but I think management commentary on these aspects will be keenly watched out for.
Well, Ravikant, this question is coming into you. Just to understand, even in terms of the valuations, despite the numbers being coming in pretty much decent in terms of the margins itself, do you think that HDFC Bank, in fact, has done a credible job coming, at least in terms of the margins, pretty much strong margins at 4.3%? And also, what do you think in terms of valuations for HDFC Bank? It is still trading at pretty much premium valuations, and considering the type of markets we are having right now, do you think that it will continue to garner or continue to command such high premiums still going ahead?
See, HDFC Bank has been trading at the premium valuations that it has been for a reason. If you compare it with the efficiency and the return ratios that it's been delivering, you look at the return on equity. It's a high-teen return on equity, and along with very high ROA. So, given that very few banks are able to actually match it, we have seen the valuation multiples being extremely being at a premium. IndusInd Bank has been closing the gap with HDFC Bank, but I mean, barring that particular exception, most other banks are some distance away from HDFC Bank. So, I think I don't think HDFC Bank needs to correct in terms of valuation multiples just because other banks are not at a premium. In our opinion, in our view, we do see HDFC Bank continuing trading at a higher premium multiple. So we are valuing HDFC Bank at 3.75 times 1 year forward price to adjusted book. I think it's going to trade at a significant gap compared to other banks.
Well, Mayuresh, this question is actually, in fact, coming into you. In terms of just the loan growth itself, pretty much a strong loan growth coming in there at nearly 25% on a YOY basis is the loan growth for HDFC Bank. Do you think this kind of a loan growth is sustainable, and would you still want to watch out for in terms of where the incremental growth is coming in from? Because in terms of the retail segment, it is growing pretty much strong. Is there any concern in terms of the corporate loan book portfolio itself? What would you watch out for?
No, again, clearly, I think if you look at the loan growth, I think it has been quite decent. And if you map the loan growth track record of the past few quarters, the retail loan book has grown at a much rapid pace compared to the overall loan book. However, having said that, probably I think the corporate credit growth is moving at a very decent pace. And again, I think if you've looked at the quality of corporates that HDFC Bank probably has, I think you're probably not looking at any stress coming in incrementally, at least in our opinion. So clearly, I think loan book above industry standards, whether they'll be able to sustain that. They've been doing that consistently over the past few quarters. Our belief is over the next few quarters, they should be able to do that. When with a healthy CASA ratio, with their continued network expansion, I think the visibility that the management had given for a robust 20% earnings trajectory should be maintained. And add to that, I think, the high quality of earnings. So I think I have no complaints with the kind of number that HDFC Bank has closed.
Okay. Last question again coming into you, Mayuresh. In terms of the valuations coming in there, do you think that in over a period of time, because HDFC Bank in fact used to clock over 25% or nearly even 30% profit growth some quarters back, and now its profit growth itself is ranging between 20% on a quarter-on-quarter basis. Do you think still out here, given the conditions that the bank can actually grow even at the rate of 20% going ahead in terms of the profitability per quarter, or can it even go ahead and grow much faster in terms of the profit, because now the competition within the entire banking space itself, especially within the retail segment, is more about the stronger players, and most of the other players are especially the PSU players are not doing so well, and the private banking players are the ones who are more into the market.
Oh, yes, absolutely. And as I mentioned earlier as well, I think the growth that it had witnessed a few years back of more than 25-30% I think with the base that starts coming in, I think 20% earnings trajectory is still what we are envisaging. And that's very, very robust in our opinion, because I think it gives strong visibility as far as your advance book is concerned. It gives strong visibility as far as the deposit book is concerned. It's a very, very strong franchise. And our own take is that the kind of earnings that they're posting, whether it be the core business, which is the NII growth, the treasury income, which is going at a very decent pace, the CASA spread, I think if you look at the retail spread, it's more than 50% at this point of time. So clearly, I think well diversified. I think it's got a strong branch network. It's got a strong retail presence. I think the CASA ratio is right up there. The tier 1 CAR is close to 12.8%. So clearly, I think all the attributes are working in favor of HDFC Bank. And though I think the valuation's on the higher side on a price to adjusted basis at around 3.3 odd times at 517, I think those valuation premiums are justified for HDFC Bank with the consistency of numbers that they keep on posting.
I'm just amazed at the resilience in the stock price. Got a little wobbly as the street tried to digest the NPA performance on one hand and the NII figures on the other, which have been rather impressive, but resilient as it can be. 1,036 is where the stock continues to latch on and continues to maintain in the green at a time when the rest of the market has completely changed tide, and we're sub the 74.50 mark in trade. Just closing thoughts then, Mayuresh, what do you do with the stock? Does it continue to be a hold or a buy?
Oh, yes, I think we maintain our rating, though I think we would hear the management out before we probably look at tweaking estimates. But clearly, at least at this point of time, it remains a buy, and it remains one of our top picks within the banking space.
Okay, Mayuresh, Ravikant, gentlemen, good chatting with you today, and thanks for really analysing the numbers. Dinesh Shukla, thank you to you as well. That's the HDFC Bank performance, and continues to hold out in the green. Got a little wobbly, but it's now trying to stabilise around the 1,040 thereabouts mark. 74.33 on the Nifty, so the market is completely cooled off from where we were. The earlier top has clearly given up all of its gains. Even the small caps have come off quite considerably, about a 1% shave off from the top of the day for the small cap index, which up until now was actually holding out. Look out for the European markets, because they are the ones which have turned negative, and sharply so. About a 0.5% slice after a 0.3% gain is what the European basket is now sitting on. More importantly, the Dow futures as well have now extended their decline, and they're now staring downwards to the tune of about 0.6%, a fall of good 130 points from the day's highs, while HDFC Bank continues to be stable. Look out for the management commentary. We will be cutting across to the management in just minutes from now. For now, though, take a break.